India's Mindspace Business Parks REIT seeing record leasing in Q4. Gross leasings in the quarter ended March stood at 2 million square feet. The REIT reported a 9.3% rise in its net operating income, while overall revenue saw an 11% growth on quarter. Mindspace also approved a fundraise of up to 5 billion rupees this week. And I'm pleased to say on that note, we are joined by the man behind the business. Ramesh Nair is CEO of Mindspace Business Parks REIT, joining us with his take on things. Ramesh, good to have you on the show. Congratulations on your earnings. How sustainable is the trend out here? Because this has been your top performing quarter since you went public, but I still want to understand, how promising does the market look, really, the rental market and the real estate market overall look?
Thanks, Tanveer and Bill, for having me on your show. Last quarter was very good for the India office market. We saw gross leasing of close to 15 million square feet, which is a 14% year-on-year increase. So this is probably one of the best first quarters ever, and the third consecutive quarter where we've seen gross absorption actually cross 15 million square feet. One good thing about the market in the last quarter was we saw domestic occupiers lease close to 53% of the overall space. So 60 million square feet of gross leasing, which was last time witnessed both in 2019 and 2023. We see this becoming the norm. And our four cities where we have a presence, which is Hyderabad, Pune, Mumbai and Chennai, we're actively seeing close to 15 million square feet of RFPs in the market.
Right. What about rental yield? Because I believe when it comes to office space, that's slightly higher than residential.
So the rental yields today, the REITs are trading at is approximately 8%. Dividend yields, when we develop something, that's close to 14 to 50%. So this 7% delta, which will definitely help the unit holders when we produce more development and bring it into the rental inflows, impacting increased NOI, and this directly flows into distribution.
Okay, I'm also looking up, the regions in which you're operating right now. You're looking at micro markets in key cities like Mumbai and Chennai, Hyderabad. What is the potential of developing office space here in these markets, and how would you describe a micro market for the uninitiated out there?
So 80% of our portfolio, Tanveer, is in two markets, which is Navi Mumbai and Hyderabad. If you look at Navi Mumbai today in terms of advantages, top three in terms of cost, which means lowest cost, top two in terms of banking, financial services and media talent, top two in terms of cleanliness, top two in terms of lowest traffic, top three in terms of infrastructure, again very good on safety, and top two again in terms of quality of living. Our second market where we have a lot of presence are Hyderabad market. Again, it's the second largest tech hub in the country after Bangalore. 60% leasing in the last 4 years in Hyderabad has been for GCCs. Last 5 years, we have seen a net absorption of 7.7 million square feet on an average in Hyderabad. 72% of the GCCs who come to Hyderabad actually come to the secondary business district of Madhapur and high-tech city where we are located. The market has nearly 200 GCCs currently, and the market where we are located has no further land to be developed, which puts us in a very, very advantageous position. This Madhapur high-tech city market is the second largest market in the country, and we've seen a rental CAGR since listing for this market of around 7.6%. So overall, both these markets, Navi Mumbai and the Madhapur high-tech city market, both looking good.
I do want to get your sense in, Ramesh, on how attractive an investment vehicle do REITs seem like in India right now? Because I know that back home, or where we are right at this moment in Singapore, the REIT market has really picked up as an investment vehicle, as an investment option for investors at large. How attractively structured are these products back home in India?
So if you look at since listing, what has been our annual total return? The keyword here is total return. We have given a 6.2% overall return in terms of capital appreciation, and in terms of annual dividends, we have given 6.1. So you add 6.1 and 6.2, that's 12.3%. Overall, the Indian office market post-pandemic, the demand has reached record levels. Huge amount of consolidation happening amongst commercial developers. Huge demand for GCCs and technology companies. India talent cost is still 1/10 of global compared to Western economies. Real estate costs around 1/8 of global Western cities. Vacancies have reduced. There is push for sustainable products. There's push for to be in well-planned business parks, grade A buildings. So overall, all the indicators point towards a good, healthy market for REITs in the country.
Ramesh, wonderful to have you in the show, and all the very best for the future. We take a short break right now. Street will be right back in 2.